In 2021, one ordinary man with a $53,000 bet sparked an unstoppable movement and brought Wall Street to its knees. This is the story of Keith Gill, a regular guy, a father, and a dreamer who took on the giants of Wall Street and won. But how did he do it?
But what do you want me to say? I like the stock.
Nothing to worry about. Just some normal guys trying to screw Wall Street. You know the drill. It's just dumb money.
Keith Gill was a normal man. Born in 1986 to a blue-collar family, he spent most of his life in Brockton, Massachusetts. Keith studied business at Stonehill College and became the first member of his family to earn a 4-year degree. After that, he landed a modest job at Mass Mutual, an insurance company. Keith Gill's life was ordinary and boring, but everything was about to change forever.
Hello, everybody. Here's Roaring Kitty. Cheers. Today I want to talk to you about a very interesting, undervalued, and promising stock that I really like. GameStop. I like the stock so much that I put all my family savings into it. Yep, $53,000. All we had. This is a huge bet for me and my family, so it better work or I'm toast. I also know that the big hedge funds, yeah, those big bad Wall Street guys, are short selling the stock, waiting like vultures for the company to die. So I know it's not a safe bet. But what do you want me to say? I like the stock. Don't be such a hater, man. You used to love GameStop.
Yeah, when I was a teenager, and it was popular 20 years ago.
Remember when we used to go with Sarah and fight over which game to buy?
And later she'll always beat us. Doesn't matter what game we chose.
Yeah, she was computer savvy.
So that's what you're doing this. There are better ways to honor our sister's legacy than bankrupting your family. I'm just worried about you. You're my brother, and you're putting way too much on the line for this. If it goes wrong, you know.
Keith's bet was indeed huge and extremely risky. Let me explain. GameStop was once the go-to store for gamers everywhere. But as digital downloads replaced physical sales, the company faced a rapid decline. By 2020, it was on the brink of collapse. As GameStop struggled, companies like Melvin Capital saw an opportunity. They began short-selling the stock, betting big on its collapse.
But what is short selling? Well, it's a way to profit from a stock's decline. Here's how it works.
When a company is decaying, a hedge fund manager or trader borrows shares of that company from clients or any lender. Then they sell those shares at the current market price. If the company and the price keep dropping as they predict, they buy the shares back, but this time cheaper. Then they return the shares to the lender and keep the profit for themselves. Once the company is about to crash, the traders disappear from sight. Short selling has long been a reliable way to make money from dying companies. But short selling has a flip side, short squeeze. If the stock prices go up instead of down, the short seller has to buy back the shares of the lender at a higher price, resulting in a loss. Stocks have a floor, but not a ceiling, so the potential losses are theoretically unlimited.
Today, Ryan Cohen, the CEO of Chewy, the pet store, revealed a 9% investment in GameStop. This stock is starting to show some growth. Slow, but steady.
Keith's message began to reach many people, far from the skyscrapers of Wall Street. Every day, people listened to him and decided to take part in the GameStop stock. Most of them used Robinhood to buy shares. With its user-friendly interface and no commission trades, it allowed anyone to invest, no matter their financial knowledge or experience. At the same time, on Reddit, the WallStreetBets forum became a hub for these new investors, a place to share strategies, memes, and support. Soon, a community and a movement were born, driven by collective hope and determination. This marked the beginning of a true David and Goliath battle, with ordinary people taking on the giants of Wall Street.
To the moon!
To the moon!
Gabe Plotkin.
Gabe, it's Ken Griffin from Citadel.
Oh yes, hi Mr. Griffin. What can I do for you?
One of my guys tells me that one of the stocks you've been short selling, GameStop, has had some high volatility lately. Just want to check in.
Oh yeah, Mr. Griffin, everything is great. You don't have to worry.
I do have to worry. I invested a lot in Melvin Capital.
Of course I know, but it's just a temporary spike. GameStop had a net loss of $632 million last year. Trust me, that company is like the Titanic.
And why are his stocks going up?
Retail traders for real. The idiots are all over Reddit with
Reddit? What is that?
the internet, sir. Nothing to worry about. Just some normal guys trying to screw Wall Street. You know the drill. It's just dumb money.
All right, Gabe. Let's see how long their fun lasts.
Well, guys, we did it. We survived 2020 and GameStop shares are around $5. May not sound much, but it quintupled its value in less than 6 months. That's incredible. So let's toast, people. Okay, so in the coming weeks or months, things may get even crazier. I know we are in profit, but we have to hang in there. If the stock goes up, hold. Do not sell. That's what they want, for us to walk away from the market happy with our crumbs. But we don't want crumbs. We want the whole cake, no matter what. Hold. Diamond hands.
During January 2021, GameStop stock duplicated its value once again, hovering around $10 per share for the first 3 weeks of the month. But in the last week of that month, the volcano finally erupted.
Kids, we're going to Disneyland.
To the moon! Oh my God.
Over the next few days, GameStop's volatile stock continued to rise uncontrollably, reaching a high of $483 per share. At its peak, the earnings of Keith Gill saw an incredible increase of over 90,000%, surpassing $48 million.
So, we're rich?
Yes, very much so.
See, bro? I always told you the GameStop stock had potential.
So, what now?
Now he sells and gets a yacht. And maybe a Lamborghini for his brother.
No.
Okay, I can accept a Tesla too.
I meant I'm not selling.
What? What are you talking about?
I'm not selling. I'm gonna hold. I still like that stock.
Are you crazy? This is a lot of money!
I know, but it's not all about the money.
Oh my God. Forget about Wall Street. This is your chance. Take it!
I'm holding.
In less than 6 months, GameStop stock skyrocketed by 48,200%. However, to everyone's surprise, investors overwhelmingly chose to hold onto the stock rather than seize the moment and sell. But Wall Street was ready to counterattack.
These people are crazy. They are holding. They won thousands of dollars, but nobody is selling. That's like a year's salary for those people. It's like they are trying to cause a short squeeze. It's bad.
I thought they were just dumb money. My only concern is that if they keep holding, they're going to cause a huge short squeeze, and Melvin Capital would be the one sinking like the Titanic.
And what can we do?
We need them to sell, or at least stop buying. They're using Robinhood as a platform to buy, right?
Yes, most of the people.
Okay, Gabe. I think I can put some pressure on them. I'll take care of it.
What the? No. Our Reddit forum is down, and Robinhood has blocked the buying option in GameStop stock. They are sabotaging us, trying to destroy the stock. This is illegal. They can't just... What's wrong? What's that?
A congressional subpoena, Keith. You gotta testify before Congress.
Wait, what? This is serious.
Very serious. You can go to jail, Keith.
But I didn't do anything illegal. I didn't force anybody to buy, and I always had disclaimers. I was just giving my opinion.
They're looking for someone to blame for the short squeeze.
I need to clear my mind.
Although Robinhood, Citadel, and Melvin Capital received a lot of criticism and backlash for blocking the purchase of GameStop stock, their strategy paid off. Many investors stopped holding out and sold their shares to avoid losing money. GameStop stock went down, and Keith lost $30 million in just 2 days. The whole case had great repercussions in the United States, even reaching the justice system and the White House. However, Keith wasn't the only one called to testify. The stage was set.
Mr. Plotkin, As CEO of Melvin Capital, would you call yourself a frequent short seller?
We run a long-short portfolio. The majority of our investments are long investments, but we also have short investments to hedge out market risk.
Steele, you lost about $6 billion in 20 days.
The market was extremely volatile.
So, you call your former employer at Citadel, Mr. Griffin, to help you out.
I asked him for advice and some funds.
And to manipulate the market to stop the increase in GameStop's stock price?
No, I don't know anything about any manipulation.
Of course you don't.
Mr. Griffin, let's get straight to the point. Did you influence Robinhood to block the buy option on GameStop shares to help Melvin Capital?
Congressman, our role is to provide liquidity to the market and take care of our business relationships. That's what made us the company we are today, and we aim to continue to do so.
Did you or anybody from your company talk to them about restricting the buying of GameStop?
No. We had no role in Robinhood's decision to limit trading in GameStop.
Hey, look at me. You're gonna be great.
Thank you, members of the committee. Before I go further, I want to be clear about what I am not. I am not a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I am an individual investor. My investment and interest in GameStop were entirely my own.
Did you have access to inside information about GameStop to formulate your thesis?
Not at all. All the information I used was public. My moves were all the result of my own analysis and thoughts based on fundamentals.
But, Mr. Gill, if they were entirely your own, why did you share all that information and ideas about GameStop on social media?
When I wrote and spoke about GameStop on social media with other individual investors, our conversations were no different from people in a bar or on a golf course talking or arguing about a stock. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources. Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field.
I feel some resentment towards Wall Street. Was there any intention in your practice to cause a short squeeze to, let's say, punish Wall Street?
Honestly, no. Many Americans feel that the system is stacked against them and that no matter what, Wall Street always wins. Once the stock market was a fair playing field where regular people, if smart and lucky, could make a fortune. You know, the American dream. But now, it's not like that anymore. The big firms have all the cards, money, technology, information. Normal people had no hope of ever winning. Maybe that's why people rallied behind GameStop, to win some hope. As for me, I just like the stock.
After the hearing, all charges and the investigation were dropped. Still, GameStop's short squeeze left a huge footprint on the stock market. In 2022, Melvin Capital closed down after losing billions of dollars. Similarly, when Robinhood decided to go public in mid-2021, it was one of the worst debuts ever. But that's not it. Following the GameStop surge, 85% of hedge funds now keep an eye on online platforms to see where retail traders are investing. These funds have greatly cut back on their short positions, scared about a possible short squeeze. As for Keith Gill, aka Roaring Kitty, he made his last post in April of 2011, before retiring from public life. He's now reportedly worth over $285 million.
But what do you want me to say? I like the stock.